Welcome back to Investor Hub X. In this video, we are going to talk about imperfect entries at support and resistance. One of the biggest frustrations traders face is this. You identify a strong support or resistance level perfectly. But price doesn't enter exactly where you expected. You enter, and price goes slightly against you. Or worse, price touches the level, reacts, and leaves without you. Many traders see this as failure. In reality, this is completely normal. In this lesson, we're going to talk about imperfect entries at support and resistance, why they happen, why they're unavoidable, and how professional traders deal with them. Let's get started. Let's clear up a dangerous misconception first. Support and resistance are not exact prices. They are zones of interest. Price does not know where your line is. It doesn't care about your indicator, and it certainly doesn't care about your entry price. Markets move through liquidity, not lines. At support, some buyers enter early. Some wait for confirmation. Some step in late. That's why price often slightly overshoots support, front-runs resistance, or reacts unevenly inside the zone. If you expect perfection, you will always feel late, wrong, or unlucky. So, what is the goal of an entry? Here's an important mindset shift. The goal of an entry is not to pick the exact top or bottom. The goal is to enter within a high probability area, with controlled risk and a logical invalidation point. If your trade idea is correct, being a little early or a little late does not matter. What matters is where your stop is, where your target is. Professional traders don't chase perfection. They manage probability. Let's look at a few common imperfect entry scenarios. Scenario 1. Early entry. This example is Hedera hash graph on the daily time frame. Price approaches a monthly support zone. You enter slightly early, and price dips a bit further. This feels uncomfortable. But if your stop is placed correctly beyond the zone, the trade is still valid. Early entries trade confidence, not confirmation. Scenario 2. Late entry. Price touches support, reacts, and you enter based on price action confirmation. Your entry may be worse, but your probability is higher. This is not a mistake. It's simply a different trade-off. Scenario 3. Missed entry price reacts perfectly and leaves without you. This is not failure. Missing trades is part of trading. Chasing them is how accounts get damaged. Professionals wait for the next opportunity. So, how to think like professional traders? Professional traders think in zones and scenarios, not exact entries. They accept that. Some trades will feel uncomfortable, some entries won't be perfect, and some good trades will be missed entirely. They don't try to force precision into a probabilistic system. Once you accept imperfect entries, your trading becomes calmer, clearer, and more consistent. To summarize, support and resistance are zones, not lines. Perfect entries do not exist. Imperfect entries are normal and unavoidable. Your job is not to be perfect. Your job is to manage risk and follow structure. Structure first, entries second. I'll see you in the next lesson.